Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Ben Jones, Product Development Specialist with Nasdaq Index Research, to discuss the Nasdaq CTA Internet Index, which tracks the influencers and innovators of the digital world. Ben, it's great to have you with us. Welcome back to Trade Talks.
Yeah, thanks for having me.
All right, Ben, let's talk about price performance of internet versus tech versus S&P versus Dow Jones. And what are some of the key internet trends that got us there?
Yeah, what a story, right? And I think it's the best way to talk about it or open it up is just to look at this magazine cover from Wired magazine from over 10 years ago, August of 2010. It said the web is dead. And the article at that point in time was talking about how, the web, right, how we used to access the internet or use the internet was dead, right? Everyone was shifting towards, video streaming and, streaming music, and, machines were talking to each other using APIs and iTunes and all those different other ways of using the internet were proliferating, at that time. And so if you just think about the past 10 years, it's just has exponentially changed since then, right? As we've just seen how the COVID-19 and the work from home pandemic or movement has really changed the way that we use the internet. And so what's interesting is that the web or the internet is alive and well. It isn't dead, it's just changing. And you can just see from a performance standpoint, the Invesco Nasdaq Internet ETF, PNQI, just how well it's done since that magazine cover has come out, right? Outperforming, technology ETF, outperforming the market benchmarks. And this is the ETF that seeks to track the Nasdaq CTA Internet Index that we're going to explore. And so what's interesting, Jill, is that when we think about kind of what has transpired over the last 10 years and really what's changing with respect to the internet trends, I think the major one really that wasn't talked enough about in that article back in 2010 is just digital video, right? I mean, that's what the users of the quote unquote internet are flocking to, and what they're using it for is to stream videos on Netflix or watch YouTube videos on their phone. And you can see the study on the left hand side of your screen where I believe over 70% of internet traffic is online video. And you can see kind of what the article was pointing out on that magazine 10 years ago is how the web traffic, so to speak, only accounts for about 20%. And it just seems like this video trend is there's no end to it. You can just see the amount of time and hours per day that people around the world are watching videos and using digital media on the internet. That's on the right hand side where it's just continuing to grow. So that's one of the major drivers, in addition to kind of what we're seeing today with the work from home movement, using services like Zoom. But in order to use Zoom, you have to use the internet, Jill.
You certainly do. And let's continue that. Those trends only accelerate and get bigger, so they continue watching Trade Talks. That'll certainly be helpful for our content, Ben. So shameless plug. So tell us more about the composition of the index and industry exposure for the Nasdaq CTA Internet Index.
Right. So with this index, it's going to be comprised of companies. Their primary business is, internet-based services, right? So think internet software, think search engines, web hosting, you name it. When we follow a classification determined by the Consumer Technology Association, CTA, that's where that comes in. We do add some liquidity and market cap screens in the index, but overall, the index is going to be comprised of internet-related companies, right? And so if you look at what the internet index looks like today, you can see a lot of well-known names at the top, right? If you look at the top 10 names, Amazon, Alibaba, Adobe, Facebook, Netflix, right? That's where this index is allocated towards. But I think what's important, about the discussion on the internet is one that it's adaptive, right? It adapts and is dynamic. It changes based off of consumer behavior and changes in technology. But it's also fairly diversified. So if you look at the slide that looks at industry weights and sector weights, you can really see that it's not just your traditional classified internet companies, right? So right now the index is, as you would imagine, about 54%, so over 50% technology names. We also see consumer services playing a major role in there. And when you drill down even further and you look at the subsector components, you can see that, of course, those names classified as the ICB as internet companies account for 31%. But you see, broadline retailers, right? E-commerce names make up about, over 21% of the index. You also see just software companies and specialized consumer companies as well. Travel and tourism, broadcasting and entertainment, right? That digital media aspect. So I think an important point to remember about this is that, yes, it is primarily comprised of, internet companies. But the internet, as we know, is alive and well and diversified and full of different companies offering different services, which is why you see a lot of these different subsectors represented in this index.
All right, Ben and Brian, let's review the 5-year and year-to-date performance. It's really quite impressive. I mean, 2020 was basically made for this index.
Yeah, for sure. It really has. And yeah, I actually had a typo. There should be 10-year performance. You can just see how much it's outperformed over that time period. And if you look at the year-to-date performance on the right-hand side, you can just see how this index has responded to the work-from-home movement, to the way that our lives have been changed. Year-to-date, the index is up over 51%. While the broad technology benchmark, which is again going to be comprised of some of these internet names, is competitive at up over 32%, but there's a large gap between the two. And I think that's just primarily a function of investors seeking growth-like names, as well as names that are providing and thriving in this time, right? By providing these services that allows people to work from home or transact their normal business. And in order to do that, you have to use the internet. And so these companies, have done well this year, as you can just see by the performance of the index year to date.
All right, Ben, thanks so much for joining us on Trade Talks.
Thank you.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.